I'm Keith McCullough, and welcome to day 3 of the Investing Summit. Thanks for all the kind compliments to our guests in particular for the first couple days. I lead off with a big one today, and probably the most important person to talk to post everything that's happened. I call it the pump put. You got potential Powell put. We got a lot to discuss in terms of inflation, pricing power. The one and only Danielle. Thank you.
How are you?
Good.
Good to be here.
Yeah. Well, I don't know. We should actually, if we could just start with that, because I know you have an opinion on it, but the difference between the Powell put and what is now the pump put or the Trump put.
They're conflicting.
Yes.
Yeah. One guy doesn't like the other.
Mm-hmm.
And by the way, now that Trump has asked the Supreme Court to judge on a 1935 ruling to allow him the authority to fire federal heads of agencies, it's not Powell. But if the Supreme Court sides with Trump, that the avenue opens for him to fire Powell between now and whatever. He's got 12 months left in a term.
Mm-hmm.
Basically.
Now, when you say one doesn't like the other, does Jay really have an opinion that's been stated, or you're as plugged in as anybody on this? I mean, you're saying Trump doesn't like.
He tends to lose his cool at press conferences.
Yeah.
So you can tell when a waspy man gets angry.
Yeah.
At least it doesn't take much.
Yeah.
He's typically unruffleable. And yet he gets ruffled when asked about, look, he understands two things right now, right? Because his chief lieutenant just defected. Christopher Waller dissented.
Mm-hmm.
I mean, Waller was the voice of Powell up until it appears to be a cozy chit-chat between Treasury Secretary Scott Bessent and Powell that said, I know we didn't have any debt ceiling, complete blow-up drama. We've got everything, pushed out until September with government. I still want you to taper like everything blew up. And Powell said yes. And Waller said, I dissent. So Powell understands what we've seen the last few days, and he understands that there could be immediate liquidity vacuums, funding issues. He was asked on stage last week, are you chatting with foreign central bankers? He's like, and he is. So, all these discussions, swap lines, of course, there's not one with Hong Kong and China last check. These things are being had, and they have to be had right now because we don't know where risk is in the funding markets. We know that the biggest banks are lending to the non-banks. There's this category of every Friday afternoon, you get non-depository financial institution lending. The Fed reports it every single week. Who knows what it is? We know that they fund, levered ETFs. That's where margin lives today, as opposed to margin on the New York Stock Exchange, the way we used to think of it. And we know that NDFIs fund private credit. Were you? Did you see the Zip car wash?
I'm getting.
I know you're getting remiked, but I got to keep talking. Okay. So I'll tell you about Zip car wash. Right? Zip car wash was a private credit that most pensions had on their books for 93 cents on the dollar, 95 cents on the dollar. That was where they were carrying the value. And then a few months ago, Zip went bye-bye. Zip went zap, bankrupt, filed Chapter 11. So, but if you're carrying something at 95 cents on the dollar, as an investor, as a limited partner, and then you wake up the next day and they filed Chapter 11, you're like, okay, maybe that was not at the right, maybe that wasn't marked quite properly. So, but the reason I bring this up is because lending to non-depository financial institutions is up about 20% year over year. C&I lending, commercial and industrial lending, flat as a pancake. Mm-hmm. So it's not that the banks aren't lending, but they're lending into the shadows.
Right. And into an accelerating bankruptcy cycle.
So corporate bankruptcies, that came out earlier this week. Commercial bankruptcies are up about 20% year over year through the end of March. S&P Global has not yet published its March tally, which means it's bad.
Mm-hmm. And these largely reflect, pre tariff expectations,
filed Chapter 11 because there's like a Truth Social whatever.
Yeah.
You filed Chapter 11 by planning.
Yep.
And there were 22 bankruptcies that Bloomberg tallied in March that were 50 million or more in liabilities, there have been several this year, multi-billion-dollar bankruptcies. So it's not just that the number of bankruptcy filings is up 20% year over year. It's that they're bigger.
Yep.
And so, and Jay Powell, he was at the Carlyle Group. He understands a little bit of this stuff. So this last week, with all this drama, he didn't really care what was happening in the stock market. But boy, he cares that credit started to crack.
Mm-hmm. Well, one's a function of the other. I don't know why people are all of a sudden surprised.
I mean, sort of. I mean, equities have been a function of flows and passive. In 2007, 2008, 2009, we didn't have more than $1 trillion in fixed income ETFs.
Mm-hmm.
Didn't exist.
True.
Which means that spreads were indicative of something back then. And now spreads are indicative of something north of nothing, because all you're doing in high yield, for example, is seeing inflows and redemptions from HYG.
Mm-hmm.
And when you have an inflow or redemption, you're going to see the most liquid names trade.
Mm-hmm.
That constitutes the spread, the high yield spread. You don't see the stuff that trades by appointment only,
mm-hmm.
unless redemptions get big.
Yeah, guys, can you show the, I was showing this yesterday, the high yield versus HYG versus the high yield OAS chart. This is something that what's frightening is that whether or not it did matter. I mean, when high yield spreads blew out on Friday, I mean, you had that accelerated the decline in the stock market. So you have they are always going to be inexorably linked. You're just saying it's different versus what they were before.
Time as opposed to inflation, they've been sticky.
Yep, that's fine. I agree with
spreads have been sticky, whereas other things like CDX, insurance, they've been a little bit more volatile.
Yep.
But spreads have been stuck on the ground until recently.
Well, they were if you can see that, you can look that way and see it. But
don't let the lines cross.
The black line was at the all-time tights only in January. Right. So you're coming from the tightest, that measure of credit, even though your point, and this is the point that you keep making, and I think, some people, they should rub you the wrong way on this, like the tweeters, is like, well, you keep talking about this being recessionary. And it's like, well, it is. When bankruptcies are up 21% year over year, for them, that's a recession. That's a depression. They're going away.
Well, but they don't like to look at revisions because it requires work. And I find that a lot of people on my Twitter feed don't really like.
They don't do work.
They don't do
read books.
I guess you have to. They don't read. You didn't have to say book.
But your main point here on credit is you're doing a lot of you're in the weeds credit.
Well, yeah. Compared to June of 2007, when spreads were this low last time, why did they stay low longer than they did in June? Even though the bankruptcy cycle started to take off, what was holding them down? Inflows and redemption from HYG. And it's just what you see is not what you get. All you're seeing is the most liquid names. These are the dynamics that Jay Powell understands.
Yep.
And he knows that credit is his boogeyman, that credit issuance must continue, or
you got to switch up.
Something is going to happen.
Good.
Might be getting interference.
Oh.
There we go.
Upside. Okay.
Being a little interference. The federal authorities are listening in on this. You're running a little, we got to change your mic here a bit.
My biggest troll on again, my biggest troll on, wait a minute, can you flip this around?
And I'll, just to expand on that chart, just while Danielle gets her mic reset here, the cycle isn't just looking at the Bag 7 stocks. Like, we go through this all the time. You have to look at everything so that you can see specifically the cycle itself. So, for one thing, yesterday, the stock market rallies. Okay, great. It has its biggest update since the last time we were in a full-blown crisis in 2008. And you learn a lot from that because the biggest updates are in bear markets for stocks. But what did the currency market do? Now the dollar's getting absolutely nuked today again. Euro's going roof. I've actually, now that your mic's back on, I've never made money being long the euro and the yen.
This is like on the long side to the U.S. dollar. So it's not just, it's not just the destabilization, most recent destabilization of credit spreads, the bond market, but that's a very daunting signal, should be to the Fed, because what it's really doing is it's pricing in, more Fed cuts than Powell's even considered talking about.
So one of my comments in my Bloomberg chat room this morning was, how would you like to be the lackey on Goldman Sachs economics team? Because the minute he hit send, that they were going, because 2 Sundays ago, they raised their recession probability from 25 to 35%. This last Sunday, they raised their recession probability from 35 to 45%. Yesterday, they raised it to 65% and said you're going to get 200 basis points of cuts in, and a nanosecond later, Trump put out his post on Truth Social. And so you're the lackey, your boss comes, here comes Jan Hatzi is banging into your office, and he's like, retract, retract, retract.
He did too, right?
They retracted immediately.
Now, went to 35%.
You wake up this morning and you find out that, the betting odds on Polymarket went from 65 to 55%, and you're the poor lackey on the Goldman Sachs economics team who's got to go back into work and be like, are we retracting our retraction? Wait, are we re-upping our taken down recession probabilities now that the other markets you're talking about said, fine, the stock market went up, but the disturbance, the disruption did not go away.
Right. Oh, like I said, it was the third biggest up day in U.S. stock market history. The prior two were in October of 2008. So, it's all a function.
There's a benchmark.
Yeah, it's a function of the volatility.
Full credit to Mike Green, one of the other ones was in 1929.
Look at, guys, show global currency volatility. Now, again, these are things that people don't pay attention to, but it doesn't mean they're not happening. That thing has gone vertical, Danielle. Now, that is a function of the pace of the dollar's decline.
Wouldn't you say hockey stick?
Yeah, look at that thing.
Just thinking.
So when Powell, it's one thing for us to say, okay, Powell's now paying attention to this and to that, but it's another thing for us to just make money. Why wouldn't I stay short the dollar until Powell at least acknowledges 50 basis points to 100 basis points of cuts? Because he hasn't even done that yet. He hasn't really acknowledged, today's CPI hit our number right on the screws, which is, again, a decel. And next month's going to decel again. So how do you get him from,
used cars printed negative despite all of the hoopty-la. And CarMax came out right after the CPI hit and said, we're kind of sort of pulling a Delta Airlines and pulling all of our guidance. But we hear that used car sales are going to go through the roof.
Oh, yeah.
Oh, wait, shit, we don't have any buyers. Oh, it doesn't matter what the price is. Nobody can get financing. Wait for the banks to report. Wait for the banks to report.
They should go through the roof because of the tariffs is the narrative on that?
Of course.
Oh, okay.
And they can. Look, I went into this week saying the PPI is more important than the CPI because you need to be able to quantify the margin squeeze. And until you know how bad input prices have increased and how little that can be passed along to the end consumer, you don't know how bad margins are going to get squeezed.
Well, margins, we've spent the last 2 days talking quite a bit about that, guys. Shows slide 58 shows where corporate profit margins, as you well know, are coming off the all-time highs. Now, it's one thing for you to
11.6% to 7 and change, but that 7 and change is too high.
This is no, guys. Go to the next. I think it's slide 58 in the deck, the one that says, "Is this greedflation margin or not?" Yeah, one, if you go back in time, all the way back to Arthur Burns' time, you have huge cyclicality in that factor.
Yeah.
Two, you got post-tariffs expansion of that, right? Like post-NAFTA, the corporates win and the people get fucked.
Right.
Now you're coming off the all-time high and you're going to go back to something we haven't done in 100 years on tariffs. And there's no case to be made that tariffs are bullish for margins.
No.
So how do you so the bankruptcy cycle's already up.
Is anybody saying that?
No, well, the bankruptcy cycle's already up 21% year over year pre all this, because this is all reflecting what happened.
This is through Q1, pre any of this.
Okay, so how many people?
And by the way, household bankruptcies are right behind it. So you're always going to have a lag.
Yeah.
Your household bankruptcy cycle's building right behind it. Now you're at a 50,000 a month run rate on households before people's credit standing FICO scores get whacked by non-payment of student loans. Before any of that hits, you're already at 50,000 every month, heading to the same level as 2019, if not higher, depending on how badly the student loan hits, take down FICO scores and impair borrowing. That's what I'm saying. The banks, I don't want to be the bank's PR firms to date, trying to come up with synonyms for what word did you use a minute ago that rhymes with duct? Yeah, I don't want to be the PR guys right now trying to come up with polite synonyms for our charge-offs. Our loan loss provisioning is, you need a few synonyms. for duct.
So how do you go from Powell's current messaging, which is like he starts every press conference with, we're doing this for the American people. You know, the people kind of like the idea of $40 oil price, I bet. The people who have no money, right? The 2/3 of people who have, like to your point, have no money. But, you know, if you give them, if it costs half to put, you know, to fill your tank, that might be a little bit better.
You will.
You know, Bessent talks about that, which I appreciate. I think a lot of people do.
He does.
But
And that's great.
But his
have
next
Have
move-
you seen the Baker Hughes rig count lately?
I mean, my question was going to be just moreover, like, why would, like, that's going to have to just be parked as bullshit as it usually is because we need to bail out corporate America.
Right?
Or no?
To what extent, though? I don't think Bessent is Mnuchin.
No, not even close.
And we know Bessent's. Well, I can't even use her name in the same sentence as his now.
No, but Powell. What is Powell, like, how does he, because you're very good at this, you're the best in the world at this, I'd say. How does he transform
Powell's
himself?
listening to Bessent. He will not listen to Trump.
So how's he going to,
Powell's
like a
listening to Bessent.
chameleon, change his messaging to, okay, now I got a poopy in the Powell pants cut again, and yeah, even though this is good for the people, I'm going to do
I want
this.
that rate on the 10-year to come down. Oh, wait. I didn't say how.
Yeah. Do you think he's going to be able to navigate this?
It's going to be pretty difficult. If he says there are no more layoffs one more time, I'm going to go hunt him down at the Chevy Chase Country Club and slap him. I'm sorry. If he says there are no more layoffs, I'm like, buddy, you're insulting everybody who's been laid off.
Yeah.
So just because they're working as an Uber driver does not mean that, yes, technically speaking, they're employed and you don't see them in initial jobless claims, but they're making a fraction of what they used to make, and they're not happy about it. So that's why you saw anything and everything discretionary in the CPI this morning melted, because people can only afford to pay for their essentials. And they're mad about that.
Well, in his own district, I mean, we
They
show the
wanna go to McDonald's.
Guys, show the jobless claims chart for Washington, D.C. I mean,
And that hasn't hit, Keith.
no.
But when does it hit?
I mean,
It hits.
it's all hitting.
It hits 5 days before the FOMC, when the FOMC is in something called blackout. Get me Nick on the phone. So, and when does Q1 GDP hit? The 30th of April, when they're in blackout.
Okay.
Get me Nick on the other phone. So it's like that. A lot's happening during blackout. That's going to rewrite. You can't say that the unemployment rate's not going up credibly. You just can't. There's too much going on.
Well,
and by the way, we're about to enter earnings season.
So why does
we should
he
call it layoff season?
Why doesn't he, like he does with CPI, on a consistent 3 to 4 month lag? He always gets the direction wrong. Why doesn't he just do the same thing with unemployment and says, "Oh, look, now I'm seeing it." You know, like when CPI at 3 in January, it's like, oh, well, we're seeing the inflation pressures back. In September, when CPI is at 2.4, well, we're heading towards our target. Why isn't
And
he just?
inflation's at 1.34.
So why doesn't he do the same stupid shit with the labor market? Say, oh, now we're seeing what Danielle shows every single day on Twitter.
Well, and that is the next pivot.
The labor market.
Yeah.
Yeah.
He'll have to say, I said before that as long as the labor market was strong, we were going to lean more on our inflation mandate. That's changed. Now we're going to lean more on our employment mandate, which is what happened last July. And that was when Nick was on the phone. And he was like, okay, the market's still only pricing in 25 basis points. We need to cut. And we forgot to do it in July. So we've got to do it in September. We've got to make up for July.
It's so absurd.
It's like we forgot to lower rates on March 19th, 2025. And we're in blackout. And GDP just printed negative. And the payroll for April just melted. Yeah. And we're in blackout.
For those of you that don't know, when she says Nick, she's talking about Nicky Leaks, Nick Timmeros from the Wall Street Journal, the Fed's lackey. Well, some people don't know. I mean,
we could be like talking about any Greek guy, right? Get me Nick on the phone. I mean, who knows?
So, okay, now you would actually, you guys probably have it as a client as well. So there's, let's just say, a linear chief economist at one of our major clients, who, whenever I say, it's almost like a funny bone thing. Like I say, okay, look, Fed policy is a three-legged stool. It's where's inflation, where's the labor market, where's the S&P 500? he's like, whoa, why do you always have to say that? Where's the market thing? Like, the entire 10 minutes that we've talked here is about what markets are doing. Like, at what point is Fed policy not having to do with what markets are doing? That is bullshit, right?
So it's not, again, what the gyrations in the S&P 500, he doesn't care about. He doesn't. But I would replace, because it's actually formal, right? There is employment, there is inflation. And according to the Federal Reserve Act, that is law, they are the lender of last resort.
Yep.
And that means that if and when markets seize up, they're obligated by law to do something about it. It's what happened in 1907 with J.P. Morgan and the crisis that year. And he's like, FYI, I'm going to die. So I can't be the lender of last resort if I'm dead. So, like England, we might need to consider a central bank.
Yeah, I say S&P 500. I mean markets. I mean,
yes.
And by the way, in Q4 of 2018, the S&P went down 20%, and then he cut.
My point is, the economist can't be mad. He
Right.
just hasn't read the act.
Okay. Now, so let's
Because they are the lender of last resort.
So but what is like a calamity? I mean, now that everybody's a basis trade expert, before they used to be the yen carry trade expert, now and then they become the tariff expert. I mean, I'm talking about these people that are constantly, chameleon and troubadouring as macro tourists, but really not having a clue. I mean, last I checked,
it's a small business owner who goes to take out a line of credit on their small business credit card, their business credit card, and gets turned down.
Okay.
It is when the bankruptcy cycle goes into turbodrive.
Okay, so you're not talking about the basis trade.
Funding, no. This is cash flow to the real economy is impeded, forcing mass closures of companies.
Good. Because
that's what I'm talking about.
Because on the basis trade, let's just get this out of the parking lot. The basis trade is what, 10 or 12 different firms trade it with leverage?
Stop yourself out in the middle of the night. Maybe don't have your stop loss get triggered during Asian trading when there's zero liquidity,
right.
And then you won't get hosed on execution.
But Powell, I would have been surprised. I mean, what I did with that was I bought the short end of the curve. I mean, as soon as people are panicking about the basis trade, and we have a dovish CPI pending, that's how you make money, right? It's like 2-year notes are down, the yield is up.
10
now
bits today.
Now it's straight back down because the CPI is dovish, and nobody's talking about the basis trade. So there is a very unique, amidst the madness and the macro tourism of it all, there's a lot of alpha to be made.
Oh yeah, there's tons of trading opportunities.
If you but you have to behaviorally know that Powell's not going to bail out the basis trade.
No.
Are we agreeing on you?
Absolutely
okay,
not.
good. But he's going to bail out the credit cycle.
Yes, he will.
Okay.
Because that's his job. He is the lender of last resort. Last resort means when nobody else is lending,
yes,
you have to step into the breach, because if it's a solvent company that is illiquid, we can't let that go.
Okay.
If it's an insolvent company, bye-bye.
Okay. So the way that you link it to the people and because I wanted to get to what is his messaging? Like, how is this going to look? Like, we review his messaging all the time. It's bullshit. I mean, to your point on the labor market alone. But he has to basically say, look, I'm here for the people. You're about to lose your job. We understand you can't get any credit, and that's why I'm doing it now.
Right. Look, the difference between March of 2020, when liquidity dried up in the treasury market and overnight trading in Asia, is that there's no safety net this time. There's no global pandemic. Congress can't even pass the extension of the tax cuts, much less come right to the rescue with a brand new CARES Act 2.0. No way that's happening. There's no safety net this time. There's nobody who's going to ride to Jay Powell's rescue, such that he is forced to pump trillions of dollars into the system when the economy was already, during not QE and going into 2019, falling into recession. He needed to roll out real bona fide QE in 2019, but he couldn't because the unemployment rate was still down, even though layoffs were going up, and global trade was down because the trade war had actually manifested in slower growth instead of higher inflation. What was the CPI in 2018? 2.4%. What was the CPI headline in 2019? 1.8%. What did the trade war 1.0 do? It slowed growth more than it raised inflation.
Right.
And that's what happens when you take a hacksaw to global trade. Everybody's like, it's just China. And I'm like, Isn't that the second largest economy in the world, the biggest exporting nation, the largest manufacturing nation, that a lot of our companies, look, I want for them to get China. Yeah. Let me be crystal clear and on the record.
Get them. You mean like get them Texas style? Get them.
Get them. I want them to get China because they've stolen so much from us.
Yep.
They've put spies everywhere. They're just, as Bessent would say, they're a bad actor. Mm-hmm. And that needs to be recognized and rectified. Period end. But don't call Xi Jinping a smart guy on TV. After you've said your 7 predecessors who sat behind this same desk are either stupid, incompetent, or lacking in courage, and out of your mouth the next time, I mean, who insults Ronald Reagan? And out of your mouth the next second, you say, geez, a really smart guy. And he's listening to this, having his translator in his ear going, what is that in Mandarin? And they're like, condescension. That's serious condescension.
Yeah.
He's being the most condescending MF to you that you could possibly imagine by saying, he's a smart guy. He's not going to retaliate. She's like, make him an offer he can't refuse. So, but he's going to sit back and formulate what his next countermeasure is going to be, and it is going to screw U.S. corporations with any kind of a presence on the mainland. Mm-hmm. Because he can.
Well, that's interesting.
It's communism. He can do what he wants. He can say no more sales of American products in China, period.
Right.
So there go. Your factories empty out overnight. And then he can say, you know what, for good measure, let's just nationalize all those cute little plants for our companies. Mm-hmm. And how would you, I mean,
like the Nike plant, the Apple plants, like.
And then he can like go like this. You called me smart. But look, it's not an American flag on top of that plant anymore. Mm-hmm. It's my flag. Mm-hmm. What's your next step?
Mm-hmm. So you're adequately bearish on China. Like how bearish can he get?
Well, China's been saying that they're going to stimulate the economy for a long time, but they haven't. It's been dribs and drabs.
They've tried.
No, they haven't tried. No.
You mean money supply growth? Try.
No. They've put little Band-Aids out there, which means that Xi Jinping's got something in reserve. He's been waiting for this moment. Look, DeepSeek was published in May. Mm-hmm. May. Okay, that's what, 11 months ago? And why did he hold it in reserve until after Inauguration Day?
Yes.
We knew that your average data center needed an 87% smaller footprint, theoretically, according to a paper that was released in China last May. And yet, he held it in reserve until after Trump was in office. And then he said, let's have NVIDIA Monday. Whee!
NVIDIA Monday.
And that's exactly what we had.
Yeah.
And the equal-weighted S&P 500 closed up that day. And everything that was passive, according to Mr. Green's worst nightmares, went funk. But the equal-weighted S&P on NVIDIA Monday closed up.
So you think that, Bessent thinks, I love how Bessent says.
Don't count China out is what I'm saying.
Yeah.
He holds stuff in reserve.
Bessent says, I'm not playing checkers. I'm playing backgammon because he can't see all the pieces. And Xi's playing Go. So it's not like they have their own games.
Right.
And the games aren't the same games.
And then they have this little ball of volatility in between that absolutely has no impulse control called Trump.
Yes. And it was a fur ball. Big fur ball.
No, he just reminds me of an out-of-control Adam with orange hair. And Bessent has to contend with that. But he mentioned Bessent by name.
Yeah.
Yesterday, he called him Scott for the first time. What does that tell you? Bessent is slowly getting his ear. Yeah. We want that. Yeah. We want a voice of reason, as opposed to whatever his other little bobbly head advisors are.
You mean we don't want Lutnick running policy?
He turned around yesterday when he was sitting, when Trump was sitting at his great big desk calling all of his predecessors stupid and incompetent. He turned around and he's like, it's over $7 trillion by now, isn't it? And Lutnick's like... And Bessent's like steel poker face, not nodding and not saying squat. He knows that there's no $7 trillion coming to U.S. shores. There's going to be some investment. There will be. But it ain't no $7 trillion.
Have you ever met with Bessent one-on-one?
I've not.
Yeah.
I know a handful of people who know him personally.
Yeah, I'm one. He will, he used to be a huge client of ours, both at Soros and then, like when he had Key Square.
After he got Soros PTSD and went off to find religion.
He is so cerebral. Like, he'll sit in a meeting, and I'll be ranting as I usually will. And he'll be just like this.
He doesn't strike me as cerebral, like Russell Crowe, beautiful mind.
No.
Genius, weird. He strikes me as being extremely thoughtful.
Yeah, so he'll sit there and he'll listen. He'll actually, unlike a lot of Wall Street portfolio managers, he'll actually listen to you. And then he just immediately compartmentalizes what you're trying to tell him and how that fits relative to his positioning. And then the questions are boom, boom, boom. Like, so it's going to be, to me, I would be very surprised if he's not like the same way until he's not in that seat. I mean, he's just going to have his plan. And until the plan breaks, he's going to stick with the plan.
Well, but true. And it's not necessarily a surmountable task taking China down.
Right.
But he knows that there is a strategy to critically wound them.
Mm-hmm.
He knows that. He knows that Xi Jinping's holding something in reserve in terms of true stimulus to get the economy through, the Chinese domestic economy, through what's to come, but not forever, not indefinitely. So there is no reserve currency. There is no printing press. And the harder China gets hit, the more its neighbors will be collateral damage. And the more he has resources, he does not have unlimited resources. And Bessent knows that.
Mm-hmm. I mean, it's interesting, like before we called the PTP or the pump tariff plan, but before it was released, if all you did was read Bob Lighthizer book, No Trade is Free, you got a pretty good preview of what they were going to do. Like, it was going to be I always say explicit, extensive, and enforced. And in particular,
it was more like random idiocy. Anyways, go ahead.
But just one of the main tenets of Trump Part 1, from Lighthizer's perspective on why he wasn't ultimately successful, not the way that he could have been.
Yep.
It's kind of like Bernanke with like, well, you didn't do enough. It's like you weren't like the BOJ. But
wasn't his book called the Courage to Act?
Yeah, the Courage to Act, the Courage to Innovate. But the Lighthizer book is extremely negative on China. Like, distrusting, like anything we actually sat down and he tried to agree with, they'd come back with the bullshit red line that was the opposite of what we talked about.
Last week, in the space of 48 hours, they said, we welcome American companies. And then within 24 hours, they were like, no foreign direct investment. I'm like, didn't you just say you wanted American companies? And 24 hours later, you were like, the door's closed, locked.
But Bessent didn't go back on that. Like,
this is China.
Yeah, China. Yeah.
But Xi Jinping is not as volatile as Trump, but he can get just as angry.
Mm-hmm. And do much nastier things.
To a point.
Yeah.
Which I think Bessent knows.
Yeah. I mean, I don't think people like get it. Like, Xi Jinping lived in a cave. I mean, the dude came from a dark place. And he's
tried being one of his enemies.
Oh my God!
I mean, who has one of their predecessors picked up and carried out in front of the world? I mean, how do you? I mean, truly lose face, and yet he did it. Don't ever get on his bad side.
Do you think that
or call him a really smart guy?
When you say that we know he's got something big in his back pocket, he's playing Go. Do you think it is like an epic currency devaluation?
No. No.
That would be like taking the sword and going.
No. I'm saying he's got enough in reserve to help prevent a complete social breakdown, chaos
on his
in his own country.
Yep.
I'm saying the stimulus is for his country.
Because the currency devaluation would expedite the breakdown in his own country.
Well, right. And he can only have so much capital flight. So he has to be really careful with that. He needs to keep the dollars on the mainland. I mean, the risk right now is that he doesn't have enough dollars. So he has to be careful about how much escapes, how much capital goes offshore. And we've already labeled China a currency manipulator. That took us like a nanosecond. So they're in between a rock and a hard place because their manufacturers, if they're really completely cut off from the United States, they're going to need a much weaker currency. And yet, he can't have that capital flight. So it's a very tenuous balancing act.
Yeah, some people like Mike Taylor sat in the same seat, and he's like, "It's over."
He sat right next to me at dinner last night.
Oh, he did. He's very
We're like gearhead people. We talk about cars.
What would be the bull case for China from here?
I mean, to the extent that you could capitalize on domestic stimulus, I don't know. What's Trivago in Mandarin? I don't know. For people like traveling inside the country. But he's not going to let complete chaos break out. He's not going to allow society to break down. But just like in 2008, 2009, he was able to pump hundreds of billions of dollars into the global economy and prop everybody up. But he couldn't do that after COVID. He had to keep the stimulus inside the country, and he's in that same position now because he doesn't have enough to spread the wealth. So this is the time when we find out truly who are our sovereign allies based on how they react to what happens to China. Not how they react directly with us, but how they decide to strengthen or weaken their ties to China, economic ties. And I mean, like right now, Germany's like pissed. I mean, they forged such strong ties, and now China's dumping steel when Germany's already on its knees, and the internal combustion engine is going poof, and now China's dumping steel inside Germany. So other countries are going to have to make a decision, even as we have this very volatile orange thing in the White House, making it hard for them to say we've been allies for generations and we always will be. We stood together during World War II. Okay, Canadians were there on D-Day, for God's sake. So he's got to figure some things out. You know very well that Canadians were there on D-Day.
And the Canadians are pissed. I mean, it's just like...
And rightly so, Keith.
I mean, I always say this. I'm like, just think like somebody who isn't an American might think. Think like a German or think like a Canadian. I mean, when you're being told this every day...
We should be able to sell our milk in Canada for whatever the hell we want.
I agree with that. I mean,
I get that.
Yeah.
And Besant is thoughtful enough to be like, yes, Canada's our ally. Yeah. This is what we're just going to get all the little barriers and make them all go away. And,
Well, Canada, I mean, they're, in the words of Trump, they'd be tremendously fair people, fantastically fair. I mean, but as soon as the Canadians get insulted, it's just like insulting a Canadian hockey player. I mean, they're going to fight back. They're going to get pissed. But if you get to this, like Lighthizer book gets to this too, it's more so it's not free trade, it's fair trade. And there's a lot of bullshit that's happened, clearly. And I think that most people I talk to on Wall Street are like, Trump's right on that. And it's like, That's right. So you stay with that.
China needs to get out of Mexico. Out of Mexico.
That'd be good.
Well, but it's right. It's fair. It's fair to say that. It's fair to say if we are going to help your middle class continue to come of age in Mexico, if we're going to potentially, put our military on the ground to get rid of your drug cartels, there should be quid pro quo.
Yeah.
And it shouldn't be in the form of some massive Chinese manufacturer having a footprint and foothold in Mexico on our border. So there are things that need to be done to fix the situations with our northern and southern neighbors.
Are you foreshadowing season 2 of Landman?
He's the sexiest man on TV.
Billy Bob Thornton?
Oh my gosh, yes.
Really?
Well, yeah, because
with like the no-ass jeans and stuff?
Oh yeah, the whole thing. The whole package. Have you seen the wife?
Oh my God, that's the number one reason why I watch it.
Okay.
No,
even in real life, she would say he was sexy because he's not supposed to be.
Really?
But he's just a badass.
Oh, he's badass.
I mean, he's just a badass.
Yeah.
You can bottle that shit up and sell it. Okay.
Yeah, so...
Maybe I watched the whole season twice.
Yeah, so season 2's coming up.
Yeah. About those drug cartels.
Yeah. Anyway, jeez. What else was I going to ask you about? Oh, I was going to ask you about back to this. So we got that China topic, at least.
So Powell's going to have to pivot, and Powell will likely potentially be forced to pivot inside blackout, which is very uncomfortable.
So walk me through how, like, I see the narratives. I have to trade all the narratives. Like, I mean, it's one thing not to agree with the narrative. Like I said, I'm not selling short-term Treasury bonds because of the basis trade. I'm buying Treasury bonds ahead of the CPI. So you can play the game if you have an explicit view. If you don't have a nowcast for CPI like I did, you wouldn't have any business doing that. But if you had Powell's view on CPI, you wouldn't do that because he's like, well, inflation is still a problem. So you have, but the setup is still there where a lot of buy-siders will say, I hear you, man, but the Treasury market's closed now. I can no longer put capital there. I'm like, dude, on the long end, it's becoming a little bit more problematic. But in the belly of the curve and on the short end of the curve, it's game on.
Yep.
It's the only way I make money there every day and in gold. Now, those two things are not saying that it's not your granddaddy's or your daddy's or your landman's bond market. It's just this narrative that keeps talking about the long end, which, by the way, is fully loaded with the Chinese theories, right?
I said they don't have enough dollars.
Right. So so that's one thing. We're still coming back to the Chinese. That's one play they still have left. Or that they've, you can't really.
Well, yeah, but they're also booking losses.
Right.
If they do this to themselves. So
Yeah.
this was always the nuclear option.
Okay.
Was selling your treasuries.
So that's where, like, to me, it's like tinfoil hat. Okay, you can tweet about it, you can write about it, but I'm not going to trade bonds with what you say to me about it. And but how do you not? Okay, if inflation keeps surprising to the downside, the economy continues to slow. You say it's already in a recession, and this situation is crystal clear with China. How on God's good earth do bond yields go up in that environment with the Fed cutting interest rates?
They don't.
They've gone up for 4 days. I mean, last night, I'm old enough to remember last Friday when they hit a cycle low on the 10-year, 3.99.
Yeah.
So do you get the same feedback? Like I have, it's all, there's constant
The
panic.
inexplicability of what's happening at the long end is it's a huge source of frustration.
But it's only like 4 days of trading.
Correct.
The real inexplicability is like, why didn't you buy TLT in January when inflation was at 3 because it's going to 2.3?
Right.
Or it's going, it's
Headline was at 2.4 this morning.
I mean, but it's going to 2.3 in our model. So why wouldn't you do that? And now people are like, it's so short term. The macro tourism is like day to day at this point.
And everybody's an expert.
But exactly. So is there a way? Just get me to the place where bond yields go up, in this with Powell cutting rates. Like, how does that happen?
Is this like a test?
Yeah, I don't know. I'm just trying to figure it out. I mean, I'm long the short end of the curve. I sold my TLT, by the way, today because I want to get it even closer. Like 7 to 10 might be as far out as I go.
Yeah.
But like, how walk me through how I get blown up buying bonds. Not high yield. I'm short high yield bonds.
Yeah. No, at the short end, you don't look. People do not understand that there is a dog year between now and May 7th FOMC. There's a lot that can happen. And P.S., we're in earnings season, and the only way to get your stock price up is to announce layoffs when you announce your earnings. It's the only way to placate your shareholders.
Yeah.
So whatever it is that was building, with bankruptcies up at a starting point of up 20% year over year, why and how he thinks he can navigate between now and May the 7th through earnings season and what every single corporation, he said it on stage last Friday. I hear you corporations, I hear you companies, except I'm tone deaf. Because if he was listening to them, he founded the industrials group, okay? He knows we're in an industrial recession because the CEOs that he's spoken to for years have told him so. Mm-hmm. I mean, have you seen Michigan jobless claims?
Brutal.
So he knows because of his background that this is real, and yet he's choosing to ignore it.
But you think by May 7th he won cuts at May 7th?
I do.
Yeah. Do you think he does the Panic 50 again like September?
Ask me midway through earnings season, and I'll be able to tell you.
Yep.
Because the survey, call Elon Musk what you will, but they waited for the survey week for March payrolls to close before they announced all the federal layoffs.
Right.
So that wasn't captured in that employment report because he was crazy like a fox. Where does the 12th fall in the month? Wherever the 12th falls is the non-farm payroll survey week. And Musk is like, okay, the day after, we're firing everybody. But don't release a single, not one headline until after that.
Yeah.
with tax season coming, let's fire 25%. Anyways. And let's close Yellowstone right before spring break. I mean, where do you come up with this? Anyways, but they still waited strategically.
Yep.
And a lot of people are going to be on severance, but it's going to start to show up.
Mm-hmm.
And the Deloitte firing people, and we're losing our government contracts. That has nothing to do with the federal workforce, but that has a lot to do with the continued carnage that we're seeing in private sector layoffs.
Yeah. So that May to June, because there's a June meeting too, right?
There's a June meeting too.
You get May, June, you go cut.
But you get Q1 GDP and April non-farm payrolls before the May 7th.
You know, the Q1 GDP headline is going to be negative, so we know that. So it's going to be very few things. I mean, absent maybe actually, you won't have the May jobs report will you have it? Is it the day before?
You'll have
the April jobs report.
You'll have the April jobs report because it's
the day before the Fed?
No, 5 days before.
Okay, 5.
Highly unusual for the Bureau of Labor Statistics to report on the 2nd of the month.
Right. Okay.
Normally it would be held until the next Friday, but it's not. It's before the Fed meets on May 7th. May 2nd is an early reporting day for NFP.
So now you got your CPI locked in lower. You're going to get a lower NFP.
And your GDP comes out on April the 30th.
Okay.
3 days before NFP.
The bond market's got it right. Like, why you wouldn't buy the short end of the bond market on this? I think, again, well, first of all, you're just dumb. I mean, I don't know.
But there is some crazy volatility, even at the short end right now.
I like that. But I mean, it's like, it's not the trend.
That's fine. It's for traders.
Yeah, the trending return, though, has been absolutely positive.
Yes, but the Fed will be forced.
Because you can price in, I mean, last question on this because we got to go. But the other thing that I'm long is actually a steepener because it's just, I think there's so much.
That was our great big call coming into the year where we said 4 to 5 rate cuts and we're going steep.
Boom. People, like, I don't know why they don't understand that one. That one to me is just like, you're just betting on Fed cuts.
They're winning the same call.
Yeah. Okay. So that we didn't have to spend any more than half a second on that one. We are out of time.
Logic is logic. But yes.
You're awesome.
And I'm still pretending like that's Dallas Cowboys.
And I am going to leave after this. I'm going to go get I'm going to get jeans like Billy Bob. I'm going to open my shirt up a little bit. I'm going to have to go down to like a part of Stanford and get the shit kicked out of me so I get that real look, you know?
Oh, yeah. The little black eye makes it even better.
Oh, but they took a nail and drove a nail into.
Oh, look. The more wounded, the hotter.
Oh, the hotter. It's getting hot here. Thank you. Thank you for joining us. I'll be back with Jim Bianco.